For anyone watching the Austin real estate market, there's one question hanging over every transaction right now. Exactly when will home values climb back to their all-time highs? To understand the climb ahead, we have to look back at the summit. Back in May 2022, the market reached a historic peak before the ongoing correction took hold. This chart projects the climb. It takes exactly 46 months, until February 2030, to recover to the peak value of $552,024. The market sits 15.9% below that peak, requiring an 18.9% appreciation to reach the top. 4 years sounds like a long wait, but this timeline isn't arbitrary. It is dictated by specific points of friction keeping the market grounded today. We can measure that friction using the Market Flow Score, or MFS. This index calculates the overall efficiency of Austin's housing market. This heat map tracks that efficiency over time. Right now, the MFS is sitting at a sluggish 4.78. That is a stark drop compared to Austin's historical average of 6.56. On the ground, a low score like that translates to a heavy supply-heavy imbalance. There are simply more homes available than buyers ready to act, meaning properties are sitting on the market much longer. When the scale tips this heavily toward supply, it physically strips buyers of urgency. With plenty of options to choose from, that upward pressure on prices grinds to a complete halt. We can see the sheer weight of this imbalance in the raw inventory numbers. Right now, there are over 17,000 active listings sitting on the market. This line graph shows the ratio of new listings coming on versus properties going pending. Right now, that number has dropped to 0.63. For every 10 new homes listed, only about 6 are going under contract. That massive inventory overhang is the primary weight holding prices down. Until that excess supply is absorbed, we will not see sudden, aggressive spikes in home values. While a sluggish market feels restrictive, the data shows us it is highly predictable. We are moving through a well-documented historical cycle. Looking at this chart, we can identify a distinct pattern. After a peak, the market historically enters a drawdown phase, lasting roughly 40 months. Once bottomed out, it is followed by a steady recovery period, historically averaging 76 months to regain full strength. Based on our current timeline, the Austin market is officially transitioning out of that painful drawdown phase and settling into this longer, steady recovery stretch. The engine driving this recovery is incredibly reliable. Over the past 25 years, the Austin market has maintained a compound annual appreciation rate of 4.895%. So the return to peak pricing won't happen overnight. It will be a slow, persistent grind fueled by that historical rate of steady appreciation. We are already seeing clear evidence that the market has stabilized. As of May 2026, the downward slide has officially stopped. This chart tracks total sales density and volume over time. We can see transaction activity is rebounding, with cumulative sold properties up 3.5% compared to this time last year. This data table breaks down pricing metrics month by month. Look at May 2026. The median sold price officially reached $462,500. That figure represents real momentum. It is a 7.6% increase from the previous month and a solid 4.4% gain over the previous year. However, it is crucial to remember that this recovery is not uniform across the board. Certain micro-markets, like Manchaca, are seeing intense buyer activity, while the broader Austin city limits remain much cooler. The Austin housing market is currently navigating a predictable, mathematically structured recovery phase. For real estate professionals, the strategy right now is all about managing expectations. Lean on the certainty of the 46-month projection and that steady 4.89%